Hey, what's happening, everybody? Sorry, I thought I was live. I was talking to myself there for a few minutes, but wanted to talk about Terra Luna. Of course, we have seen some crazy volatility just from when I went live earlier this morning to where we are now. It has been insane. So let's talk about some swing trade opportunities here because there are various ways to make money in crypto even during this crazy market. Right now, I'm looking at Terra as that opportunity. And a lot to jump into, a lot to unpack. We dipped down below 90 cents when I first came on the air this morning. First off, great conversation this morning with Chad from Devour Token. Check them out. Definitely. This is a project that is built to last, in my opinion. They are really, really out in the forefront of bringing Web3 to the restaurant industry. The use of NFTs, loyalty rewards programs, very interesting. This is interesting too, though, with Terra and what's going on. Again, this thing was down to like 83 cents, 84 cents. Now it's back up to 4.59. A lot of this is happening. These are 1 minute candlesticks, by the way. We were down in here at 80 cents when we came on the air this morning. Look at this. 80 cents, even lower than that, actually. We got down to 74, 72 cents earlier this morning. Crazy. And then we've seen just crazy volatility here all the way right now. It actually spiked all the way back up here to like $7, almost $8. Now it's back down to 462. So maybe some opportunities here to be swing trading Terra today. And I can't do it while I'm on the air. So I'm sacrificing, maybe missing out on some opportunities, but that's cool. We're going to jump into it and unpack it. And so here's something I just found. Terra's Do Kwon finally releases recovery plan for UST. Community recalls Lehman Brothers tragedy. So Mr. Kwon proposed major changes to the Luna/UST balance design in order to accelerate the process of absorbing Terra USD, which is UST, an algorithmic stablecoin. Thank you all so much for tuning in too. Make sure you hit the like button here on your way in. Increased minting capacity would accelerate UST absorbing. Here's the proposal. So Kwon has taken to Twitter to share the details of Emergency Proposal 1164. It addresses the unmatched depegging, okay? The depegging of Terra USD, which is UST stablecoin, which is now available with a 57% discount to its intended peg to $1 equivalent. Now, it says, Dear Terra community, Do Kwon has this to say: there is no other way to stabilize the situation besides aggressively destroying the UST tokens that are leaving the market. This in turn will increase the UST price and make it closer to the regular one-to-one peg to the US dollar. As such, Do Kwon proposes to increase the minting capacity of the protocol from 293 million to 1.2 billion in equivalent. Now, what this is going to do, it's going to help to accelerate this process of token burning. He feels this is the only way to kind of fire this thing back up and get it closer to that one-to-one peg to the US dollar. Technically speaking, the process seeks to adjust two parameters in Terra's, this is Luna's code base, namely base pool and pool recovery block metrics. By press time, 34.5% of Luna enthusiasts has voted for the proposal. Almost everyone supported its implementation. Now, it looks a lot like the Lehman Brothers collapse, DeFi veteran says. As covered by you today, previously following the massive Bitcoin collapse, investors started aggressively withdrawing their liquidity from UST and associated mechanisms. As a result, it lost its peg to the US dollar, while its underlying asset, Terra Luna, collapsed by more than 95%. We can go over here and take a look. Let's go to CoinMarketCap real quick and just see where both of these are right now. And good morning to everybody out there. Bitcoin is coming back here a little bit. We are seeing a little bit of a reversal back up to 31.5. It has just been crazy, crazy amounts of volatility right now. And we can see if we scroll on down, here's Terra USD trading right now at 51 cents. This is supposed to be close to the US dollar, $1. So we are about 50% away from that right now. So this is the big topic of the day, in my opinion, right now that we're looking at. These are both trending right now, Terra USD and Terra, which was down about 98%, now down 86% in the last 24 hours. We've seen Terra fall out of the top 10 all the way to ranked in the 80s. Now it's back up in the ranking of 26. I mean, just crazy, crazy volatility here with Terra. So we have seen a nice little resurgence, though, And again, this doesn't even indicate where we were. We were lower than this, in the 70-cent range. Now back up, currently trading at about $4.40. Actually, this is more real time, $4.96. This is 1 minute outlook here on Terra. Look at the volatility. Man, talk about a swing trade. Look at all the sell-offs here after we crushed it and got all the way back up almost to $8. Look at the profit taking. These are swing traders, 100% swing trading Luna right now. So let me go back over here. It says here, meanwhile, one of the key figureheads of SushiSwap and Polygon's chief informational security officer, Mudit Gupta, compares this collapse with one of the bloodiest dramas on the financial markets. He says, I don't think the crypto space has ever seen anything of this magnitude and severity before. Even the DAO hack feels nothing compared to the Terra crash. This is going to have long-lasting consequences. It's bad for the whole space. This feels very similar to the Lehman Brothers situation in 2008 that caused the financial crisis. It didn't matter if other companies were doing well or not. Everything tanked. It says, according to him, the crash of the second largest smart contracts platform will leave no crypto business unaffected right now. So this is certainly the talk of the town. We'll see if we can find some other interesting insights here to add on to it. I've got Luna hashtag here. Let's see here. 19 seconds. Some people will be clamoring for $20 to $30 Luna now. There's almost 900 million circulating supply at the moment. That's almost 4x the supply from a week ago, and it's not going to stop until UST is back to peg. Whether long or short, this could be kept in mind along with BTC price action. This should be kept in mind. Let's see here. What else do we have? We already looked at this. Here's one. Here's an article coming out from BlockCrunch. Let's see what they have to say. Plunges to 80%. Okay, cancel. Terra ecosystem has been diving into the ocean of losses for some time. Today, UST, the native stablecoin of Terra, has dived below 50 cents. We are just above that mark right now. The value is constantly crashing. The selling of 1.5 billion worth of BTC by Luna Foundation Guard to protect UST went ineffective. Terra is on the stage of depegging the UST stablecoin with US dollars, as a consequence of which Luna is losing its value speedily. However, Terra founder Do Kwon has come up with a recovery plan. That's what we just outlined here. We can go over to Do Kwon's Twitter page here, and let's just see if he's saying anything else aside from what we just went over here. Let's see. Here we go. Master of stablecoin Luna. Let's see. Okay, here's his outline. This is the entire thread. I understand the last 72 hours have been extremely tough on all of you. Know that I'm resolved to work with every one of you to weather this crisis, and we will build our way out of this together. First, if you don't understand how Terra's peg stabilization mechanism works, here's a good overview. How to bring back my death spiraling Luna model. Okay, so we'll come back to that here in a second. A review of the current situation. UST is currently trading at 50 cents, a significant deviation from its intended peg at $1. The price stabilization mechanism is absorbing UST supply, over 10% of total supply, but the cost of absorbing so much stablecoins at the same time has stretched out the on-chain swap spread to 40%. Therefore, the Luna price has diminished dramatically, absorbing the ARBs. So before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There's no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. First, we endorse the community proposal 1164 to increase base pool from 50 million to 100 million SDR, decrease pool recovery block from 36 to 18. This will increase minting capacity from 293 million to 12 million. To 120 million. More details will be discussed in the community forums here. It says here, with the current on-chain spread, peg pressure, and UST burn rate, the supply overhang of UST, i.e. bad debt, should continue to decrease until parity is reached and spreads begin healing. Naturally, this is at high cost of UST and Luna holders, but we will continue to explore various options to bring in more exogenous, what is that word? More capital to the ecosystem and reduce supply overhang on UST. As we begin to rebuild UST, we will adjust its mechanism to be collateralized. The Terra ecosystem is one of the most vibrant in the crypto industry. Many people, guys, by the way, I was at the Bitcoin Miami event. Many people were talking about Terra and how they really loved the future of this ecosystem. And there's still time. I mean, we can still rekindle this, but man, this is very, very catastrophic here in the short term for Terra. It says here, with hundreds of passionate teams building category defining applications within. As long as these builders, TFL among them, continue to build, we will come out of this together. Terra's focus has always oriented itself around a long-term horizon. Another setback this May, similar to last year, will not deter the lunatics, which is what they call themselves. Pretty cool. Short-term stumbles do not define what you can accomplish in the long term. It's how you respond that matters. And he says here, Terra's return to form will be a sight to behold. We're here to stay, and we're going to keep making noise. So this is coming from Kwon. So again, we are watching pretty much crazy volatility right now. Look at this. Now we're in a free fall again here of Terra. Look at the fluctuation. We're back down to around $3. Again, this thing was trading down here at 72 cents while I was on stream here just this morning. Went all the way back up to almost $8. Now hovering around this $3 mark. Just crazy, crazy amounts of volatility. So let's see here what people are saying in the chat. Luna looks like a terrible investment. It's just being inflated like hell. They make the Fed look good. What's up, Rodrigo? Hoskinson had a good share. He explained what likely happened. Foxy, where was that? Was it on YouTube or something? We can even listen to that. What are you all buying Luna on? I bought on CDC, but for some reason it didn't let me sell my full bag. XRP exploding outside the US, looking good. Lots of utilities, NFT, metaverse, etc. in spite of this crash. What's up, Luis? Good to see you, my friend. People asking if you should keep holding Luna due to high loss. Guys, only Luna can flip your loss at the moment. I have not stopped buying XRP, Nut says. Terra, we can make it back, guys. Luna, RIP. LFG, Luna, I sold all my SHIB for Luna. Isn't crypto supposed to be the hedge of it against inflation? That's exactly what Terra is doing. Yeah, Rodrigo, it's interesting, right? Because that is what a lot of people have to say about crypto and Bitcoin is the hedge against inflation. I think long-term it still is. Short-term, though, it's really been trading alongside the markets. And maybe that's just because of how rough the markets have been altogether. So, okay, so Hoskins had said something on Twitter as it relates to this whole situation with Luna. Let's see. Which one is he? Personal account. He's probably tweeting from this one. The rumors floating around about how Luna collapsed so quickly all converge to the same reality that every DeFi protocol and cryptocurrencies face. There is a massive attack surface from hackers to traders. If there's an exploit, then someone will find it and break it. Charles says. Let's see what else he had to say, if he had anything else to say on this whole situation. Let's see. So here's the word on the street from Luna. Yeah, we went over this a little bit earlier. There's a lot to unpack here. Hold on one sec. Foxy says, just sent me something. Got it, Angela. Appreciate that. Let's see here. But we talked a little bit about this, but we kind of, ran out of some time because we wanted to bring in Chad from Devour. By the way, great conversation. Go check it out from this morning. It was nice to kind of break away from the charts and break away from the madness a little bit and talk about an up-and-coming project that has so many things going for it. But I want to come back to this. BlackRock and Citadel essentially borrowed $100K from Gemini. It appears in their loan book. They swapped $25K of that BTC back into UST. This was all done quietly in anticipation of the attack. When the time was right, they called up Duquan at Terra Foundation and said they wanted to sell a lot of BTC for UST. As it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of BTC at a discount for UST. And again, UST is the stable coin, an algorithmic stable coin supposed to be pegged to the US dollar, which is trading at about 51 cents right now. Duquan took the bait. He gave them a huge chunk of UST, thus lowering the UST liquidity significantly. At that point, what happened was BlackRock and Citadel dumped all of their BTC and UST, causing massive slippage and triggering a cascade of forced selling in both assets, both BTC and UST. That is why we saw BTC run super, super low here earlier this morning. We can go over and look at that as well real quick. Here's Bitcoin. It has really made a nice resurgence, but look at this sell-off. That is what happened. This is what we talk about, market manipulation. This is what's going on in the space. and it's worse today than we've seen it in a long, long time. Okay, so we were trading here at 31.6, boom, all the way back down to 29.3. This is what they're referencing, okay, in looking at this. This is exactly what they're referencing. Now, it says the real problem was BlackRock and Citadel knew that Anchor, which holds a lot of Luna, right around 67% at last check, okay, this is just a few days ago. We actually had it in our newsletter, by the way. Okay. The real problem was BlackRock and Citadel knew that Anchor, which holds a lot of Luna, 67%, was a Ponzi scheme. They offered 20% staking APY, for Christ's sake. And this crash would trigger more withdrawals than Anchor could repay. And it says there, these forced withdrawals and selling would trigger a massive sell-off in Luna, thus furthering breaking the $1 peg and wrecking the crypto market further. BlackRock and Citadel can now buy the BTC back cheaply, which they've probably already started to do, to repay the loan and pocket the difference. Meanwhile, billions of longs in Bitcoin VAR were wiped out. This was pure market manipulation. Pure market manipulation. So, when you say UST, do you mean USD? No, these are different, Lance. USDT is Tether. UST, let me go over here and show you. UST is another stablecoin in the Terra ecosystem. This is UST, Terra USD. It's a different type of stablecoin. It's supposed to be, pegged to the, US dollar, which, it has. Since its existence, it has been. Okay. Had a little bit of a dip off here back in March, where it came to 98 cents, but nothing like this. This is what happened. This was pure market manipulation, but look at it coming back. Okay. It is bouncing back a little bit. I mean, it got all the way down here to 30 cents today. Got down here to 30 cents, which is insane. Now we're back up close to 50. But this is what happened. Now, again, this stablecoin is a little bit different than USDT rather, and USDC, right? Coinbase's stablecoin. This is a decentralized and algorithmic stablecoin. It's scalable, yield-bearing coin that is value pegged to the US dollar. It was created to deliver value to the Terra community and offer a scalable solution for DeFi amid severe scalability problems faced by other stablecoins like the DAI coin. Okay, thus Terra USD promises users a higher level of scalability, interest rate accuracy, and interchange usage. Provides benefits that have made it a standout stablecoin competitor. Of course, a lot of those, reasons why people loved it, saw that big collapse today, and hopefully they get the news here and information that's important and what actually happened here. Due to its minting mechanism, UST meets the requirements of DeFi protocols that it uses without losing scalability. UST can also be easily added to crypto wallets by simply integrating USD as a payment method. Another area where Terra USD has shown its power is dApps. For example, platforms that mint fungible synthetic assets and track real-life asset prices use UST as a pricing benchmark. Okay, it was launched back in 2020, since gained the reputation as the most scalable stablecoin on the market. UST can be used in conjunction with Luna, Terra's non-stablecoin crypto, or as a standalone token as well. So again, the founder, one of the founders, kwon. Man, this is just brutal day for Luna. Let's see where we're at right now. Okay, we are bouncing back. Look at this. I mean, look at the volatility. You want to talk about an opportunity here to swing trade, guys. My, oh my, this is crazy. Look at this. I mean, these are minute candlesticks. Earlier this morning, look at this. Look at this. It was down here, got down to 70 cents. Okay, currently trading at 366. Just insane. We are turning green a little bit with BTC here and ETH just in the 24-hour, trading volume here. But that's what happened. I'm going to put this link down if you want to read more about the official statement here. Here you go. That's the cryptonews.net link. Drop that in there for you guys if you want to check that out. Let's see. Let's see what else we're talking about here. I think Luna will make a parabolic pump back to 60. Caden says, Rodney's about to do a video on Terra saying it's a rug. You should just bring him on. Dirty Miner Apparel. Yeah, I mean, we're learning here in real time, man. We're learning here in real time what's going on. What's Luna's price now? We're looking at it here, $3.51. But this is exactly what happened. I mean, this is the best breakdown we can find. Okay, let me get rid of this. Let me get rid of this banner. Hold on. Okay, let me hide that. This is it. Okay. Can we zoom in on this? Nope, not really. So basically, this comes back to market manipulation, guys. This is what happened. BlackRock and Citadel borrowed 100K, swapped 20K of BTC into UST. They knew an attack was coming. When the time was right, they called kwon at Terra, said they wanted to sell a ton of BTC for UST. As it was a large trade, they told them they didn't want to move the market, asked if they would like to buy their large block of BTC at a discount for UST. That is the pegged stablecoin in the Terra ecosystem. kwon took the bait. He gave them a huge chunk of UST, thus lowering the liquidity significantly. At that point, BlackRock and Citadel dumped everything, dumped their BTC, dumped their UST. So when everybody wants to call out people, by the way, people like YouTubers that we pump and dump, we can't pump and dump, but guess who can? BlackRock and Citadel. They can. They have the power to do that. Nobody else, no retail investor has the power to do that. So that's just blasphemous, by the way. But anyway, that's for another day. BlackRock and Citadel dumped all of their BTC and UST, causing massive slippage and triggering a cascade of forced selling in both assets. The real problem here was BlackRock and Citadel knew that Anchor, which holds a lot of Luna, again, at last check, about 67% of Luna, okay, is in Anchor protocol, was a Ponzi scheme. They offered 20% staking APY, for Christ's sake. And this is a message, okay, going to Charles that he then posted, by the way. Triggered more withdrawals than Anchor could repay. These forced withdrawals and selling would trigger a massive sell-off in Luna, which we saw, thus further breaking the $1 peg, which we saw go all the way down to 30 cents earlier this morning, and wrecking the market further. BlackRock and Citadel can now buy the BTC back cheaply, which they've probably already started to do. That's why we're seeing the bounce, okay, to repay the loan and pocket the difference. Meanwhile, billions of longs and Bitcoin VAR were wiped out. This was pure market manipulation. This is what we talk about all the time. These are the big dogs who could actually manipulate the market. Retail investors can't manipulate the market, but BlackRock and Citadel can, and they have here today. Okay, so let's see what else we got here. Hopefully this dip will make us some money. I love sales. What's up, Chris? Just brought a load of Terra Luna. What's up, JB? This is a conspiracy and not grounded in facts right now. This is someone guessing it on 4chan. I hear you, Believes, but it's the best we have to go off of right now. And I mean, here's the thing. Charles Hoskinson is putting it out there. He's a pretty smart guy. I don't think he would just be putting this out there willy-nilly, right? So here's the word on the street for Luna. This is coming right from Charles, okay? Way smarter than I am. So, I mean, I don't think he would just put this out without really fact-checking it. If he has, Michael says irresponsible to share this based on what, and again, I'm just reporting it. I don't know. I mean, I'm reporting what we have. Yet every one of you guys in the crypto media share the idiot. Punk story. Don't lecture me on responsible media. The Ethereum books made a crypto no better than 4chan. Okay. So there's already been some pushback that he's put this out there. But again, this isn't, it's not fact. You're right, Believes. But I mean, it's what we have right now. It's the information we have. We went over kwon's plan. We have that information. He put a series of tweets out. We went over what Charles Hoskinson has put out. To me, these are the two big things that we have to go off of right now. Algorithmic coins like UST is not sustainable. What's your opinion? Well, I mean, today shows you that it's very risky. Rumors are floating around that Coinbase having major problems. What's your take, Zach? Have not, seen it or looked into it too much, man. But, I mean, it's a mess right now. It's a mess. Let's see. Wait for Luna to hit $1 and then buy. What's up, Chris? Man, you could have got it at 70 cents this morning, and phew, they know how it happened because the blockchain history is transparent for a reason. Bought 1K Luna at $1. Why not? Luna's dropping again. Let's check it. Yeah, it is. Oh, yeah, it's dropping. Good to see you, Kenzie. So if I'm the MMF platform and they are offering anywhere from 20% APR for stablecoins and 100,000 APY for protocol tokens, is that considered a Ponzi scheme? It's an interesting idea, John Carpenter. Yeah, it's interesting. No, that's a good point. Here's the thing. Charles is obviously looking out for his best interests, in Cardano, right? I don't know what's true or not. I'm just reporting what we have. I'm not taking a side here. They keep adding to the supply. Is anyone paying attention? What's up, Reem Diddy? I never bought USDT because last year we were warned there was a problem with this algorithmic stablecoin. Luna going down again to 70 cents. Grab it, guys. I got 4,500 Luna at $1.10. This would be one way that this could make what happened. Like you said, Charles is a smart man. Yeah, it's just something we have to go off of right now. If Luna goes for a buck, I'm in for 100. Luna or Ape? Man, that's tough, man. Ape at under 7 is a buy all day. Yeah, I do like ApeCoin down there. Actually, let's see where ApeCoin's at real quick. Let's see. If we go to Dex Tools, we've got ApeCoin. Oh, it's back up over 6, actually. $6.60. Yeah. It was less than 6 earlier, though. Look at that. Dipped all the way down to like 5.50, give or take. What's up, Steve? Welcome in, man. I'll let it bottom out. If it holds, I'll drop 10 in it. Yeah, Ape did almost hit 5, Chris, earlier. This would be the one way that this would make it happen, like you said, Charles. Yeah, I mean, it's just what we have to go off of right now. I mean, people are going to be upset that he's sharing this. I mean, obviously, we're trying to piece it all together. We've got the official statement here from kwon, but we've also got what Charles is saying. Let me pull that up, and then let's search for anything else that's out there. Let's try to piece it together and at least provide some good insight here. So we'll go back to Charles. There is. So, guys, if you're interested in finding out what Charles dropped in, this was 1 hour ago, right around 9:42. Here's the word on the street on Luna. So I'll drop this in if you care to read this. He's basically saying it was a calculated attack by BlackRock and Citadel, who both borrowed 100K from Gemini. It appears in their loan book. Swapped 25K of that BTC into UST. Took advantage of kwon and basically dumped all of their BTC and UST, causing a huge, huge cascade of forced selling in both assets here this morning. So that's what Charles is putting out. Let's see if there's anything else, though. Let's see here. Welcome in, everybody, too. Might have some new people on the stream. Make sure you guys hit that like button. Of course, we're trending here. Luna's trending. Let's see what we got. Hit that like button and subscribe, guys. If you haven't already, that would be awesome. Let's see here. Let me set this up real quick. Okay, cool. Wow, Luna's getting smashed. This was from a while ago, 6:29 p.m. That's yesterday. Let's go to the latest here, see what we find. Wow. Here's one person saying, just know this, if you are selling, I am buying. I have not owned Luna in a very long time, but I'm comfortable buying some here. I wonder how many people are also buying here. Don't kill yourselves, please. Bad days happen, but it also passes. Guys, let me know down below, what are you guys doing with Luna and anything else in the market right now? I'm curious to get your guys' thoughts too. Trying to see if there's any big tweets from like some big people here. don't see anything crazy. Let's just go look at the top tweets here. Was this Charles talking about Luna?
Inviting the Wall Street recession, reallocate your portfolio. This was always the danger of inviting the Wall Street types in, is that they would just simply treat crypto like any other asset and label it as an exotic high-risk one. And when the markets go in not the direction they want, they dump it. The retail people are holding because they are opting out of a global system that's unfair, a global system that's frankly rigged. I've seen it myself. I've been in the meetings. I've talked to the people everywhere I go. They don't give a fuck about sustainability. They don't care at all in any way, shape, or form about whether you live well. Your standard of living is the same as the standard of living of your parents, your grandparents, your great-grandparents. In fact, quite the opposite. They're trying to prepare the masses to accept a standard of living significantly less than the one that they inherited, the one that they grew up with, the one that their parents grew up with. This is no way to run the world. This is no way.
Interesting. I don't think that might have been from a little while ago. I'm not sure if that was like, today. Let's see. With Luna crypto NFTs down, please, if you're feeling suicidal or need to talk, you can text 741-741 when you're feeling depressed. An important message here put out by Morgan. Obviously, she's well into NFTs. That is important. I mean, a lot of people are really, really struggling here with so much invested, not only in Luna, but wow, Neko going crazy here. Hit the like button if you lost in this whole Luna and UST crash. Let's see how many people from our community got impacted. This is somebody from the Wall Street Bets community.
I was heavily into stables, as you know, and I always said in November when I went heavily into stables that I was waiting for the time like today and yesterday. I deployed 7 figures plus into the market the last 24 hours. Everything's a gamble in a way. And for me, I believe in blockchain technology. I believe in cryptocurrency. This is my life. So for me, I thought if it was terrifying putting that amount of money in stables back into the market with these big red candles. And today, when we've seen that big capitulation from BTC, and I'm not saying it's over, but for me, I've gone 100% back into crypto. I was getting AVAX at like $25. I went in heavy with AVAX. I got all my low caps yesterday. I really bought the dip in a big way. I got 1 million XRP, which was yesterday, which was fantastic at 47 cents. I was buying XRP the same price in 2020 and also in 2017. Look, guys, I'm not saying I don't know everything. All I'm saying is that fortune favors the brave.
That was an interesting perspective. He's going all in. Let's see if there's anything else here. I don't see anything from very influential people. Let's see it's time, crypto community, for us to help us out. Stablecoin and Terra money. I'll be deploying a significant amount of my capital into Luna over the next few hours. This is Dr. Crypto. Interesting here. A lot of people reaching out, trying to help out the situation. This is important. You should never trade with leverage when the market is crashing like crazy. I saw a couple people, talking about this in the live stream earlier. It's the best time to build spot positions. Getting rich with get to wrecked quick. I know so many OG traders trading liquidated in Luna and last few days. Okay. Let's see if there's any new articles out here on Terra. So we went over Duquan's plan to kind of rekindle this and move forward. Let's see if there's anything else here on the aggregator. Guys, make sure you guys hit that like button. Would really appreciate that. Definitely helps us out. Also, consider subscribing to the channel if you're new. Let's see here. Hold on one sec, guys. Got to do a couple things on the back end. There we go. Okay, good. Cool. All right, what is Terra? What is going on with Terra? Price dropping. Okay. Let's just go Luna and see if that gets us anything. Luna. Let's see. Here's 1 hour ago. Terra sacrificing Luna to save Terra USD. Forces coin to plunge below $1. So this is kind of the stuff we kind of already knew. This is Kwon talking about, his big thread to the community. That came out this morning. Oh man, it's tough, guys. It's a tough time to be in crypto right now, but trying to learn as much as we can through this. Let's see. Let's go back to CoinMarketCap. Bitcoin's holding there at 31.4. It's up a little bit, actually. We're down to a $1.37 trillion market cap. Chris says, don't buy Luna, buy BTC. A month ago, they used Luna to stabilize UST. That's how Luna hit 115. Fast forward, now they have added 500 mil coins back into circulation to stabilize UST. Good insight there, Mike. The smart people are hoping for the bear market. Well, I think the smart people understand that the bear market is the time for accumulation, is the time for opportunities. It's how you make money. I mean, it's certainly how you make money in these markets. So crazy. All right, guys, so I'm going to rehash a couple of things that we know. So Kwon had a long thread about kind of what their plans are. Okay. Let me go back to this one here. First, we endorsed the community proposal 1164. This was the big one, to increase base pool from 500 million to 100 million. So if we go this, we can click this. This is the proposal that he's talking about here. 65% of them, 65% of the people who voted said yes. Almost 200,000 votes. UST has lost peg to $1 for multiple days, starting from May 8th, 2022. There's a large amount of UST withdrawal, but burning of UST is slow. Proposal is to increase base pool from 550 mil to 100 mil, decrease pool recovery block from 36 to 18. This will increase minting capacity from 293 million to 120 million. Details below. Now, the other predominant thing that's happening right now, Charles Hoskinson putting out this information. People are pissed that he's putting this out, and we don't know if it's true. It's just a message from Anna, whoever that is, right? But this is what he's saying. Then some people are responding. Actually, I want to see some of these responses. If this is true, shouldn't BlackRock and Citadel be held accountable for this? It's called trading. Taking advantage of weak markets and bad protocols isn't necessarily illegal. Yeah, it's true. It's true. If this is true, let me go back to the official tweet here. There we go. You're validating this without knowing the veracity. Feels about right. The way and the veracity that Luna collapse smells of a short play like this. I mean, it does make sense. What's outlined here. Is it true? I don't know, but it makes sense given how quickly things collapsed. David Gockstein asking, so was this an attack on BTC? It was an attack on all of crypto. It looks like if this is true, they had a loophole here and an opportunity to capitalize on a lot of things. BTC, Terra, and the stablecoin. This is an interesting perspective. BlackRock and Citadel saved you all time by exposing Luna and UST's Ponzi-onomics before it was too late. Their unsustainability tokenomics were bound to fail anyway. Better now than later. We talk about all the time, guys, crypto. These are the growing pains that we're going through in the crypto markets, right? You're seeing the fighting back and forth, the he said, she said, the big institutions manipulating the market. And I think these are all these times of, trial and tribulation and struggle. And, these are the growing pains that every new technology goes through. We saw it with the internet. I think we're seeing it now with crypto. I do think this is a necessary step in the right direction of going fully, crypto, fully blockchain, fully, adopting this technology. But today's a crazy day. So if you guys are just tuning in, this is what, again, something that Charles Hoskinson put out. We don't know if it's true, but BlackRock and Citadel borrowed $100K from Gemini. It appears in their loan book. They swapped $25K of that BTC into UST. This was all done quietly in anticipation of an attack. When the time was right, they called up kwon at Terra and said they wanted to sell a lot of BTC for UST. As it was a large trade, they told them they didn't want to move the market and asked if they could buy their large block of BTC at a discount for UST. kwon, supposedly, if this is true, took the bait, gave them a huge chunk of UST, thus lowering the liquidity significantly for UST. At that point, BlackRock and Citadel dumped all of their BTC and UST, causing massive slippage and triggering a cascade of forced selling in both assets. It was that, cascade effect, because then once people saw it going down crazy, they had to cut their losses. They had to get out, right? Which tanked the price of both there. The real problem was BlackRock and Citadel knew that Anchor, which held or holds a lot of Luna at 1.67%, give or take, was a Ponzi scheme. And this is, again, coming from Anna. This is her perspective. They offer 20% staking APY, for Christ's sake. And this crash would trigger more withdrawals than Anchor can repay. That is crazy, though. 20% APY. And Anchor had some crazy APY numbers. We were actually talking about it on the channel a couple months ago. Some of the APY numbers that were offered there on Anchor. And I think, we saw Anchor's price move up recently. We put this in the newsletter. We put this in the newsletter recently. Charles is live on Twitter. Okay. I think a lot of people left. Let's go listen to him. I think a lot of people left. Crypto.com, when all that shit came out, went over to Anchor because the APY was so high. All right. But okay. He's talking about crypto here, Charles. Let's listen in.
Not concerning to me, but one of the things that I'm most hurt about, other than the fact that I lost a lot of money and destroyed a lot of my portfolio, was I really wanted an algorithmic stablecoin that has no reliance on a dollar at all, or assets that are linked somehow to a US dollar. So I get it. There's a lot of collateralized stablecoins, but that's not really the newest concept in the world. And I just hope people don't lose faith in the concept of experimenting on new stablecoins. I know you guys are pretty much, I know Jed's on a test net, and I know that Jed is exactly that. And I know that Jed is withstanding or on the testnet has withstood multiple scenarios and attacks. And I really hope that can restore confidence in people's belief in algorithmic stablecoins.
So Jet is interesting. It was launched first on Ergo at Sigma USD, and it's been around for, I think, about a year and a half on Ergo, and it's always held the peg, but it's highly over collateralized. I think at one point it was 8-1. So it's not a particularly attractive investment asset. It doesn't give you these insane returns that people are pushing for that you get from partial collateralization. But it was really meant for stability in its design. And, we created a follow-up paper based upon the experiments that were done on Ergo called JED. And the goal there was to try to improve the design and also take a look at some of the attack vectors that had happened and plug those holes. And that was really a remarkable paper from the perspective that it was a all-in-one, an implementation, a formal specification, and a traditional scientific paper. Then Jean-Frédéric, one of the guys on our end, spent about 6 months playing around with it, writing code, just to try to create a reference that Cody could use for actually launching JED, bringing it to market. And we're now seeing that on the test net, and hopefully they're going to be able to get that out June, July. Just depends on how quickly they want to roll things out, and whether this event is going to make them slow things down or if they're still going to be on that original schedule. But it's a really unique and fun thing to play around with. The danger of having a layer one where the entire mechanic of the layer one is built around an algorithmic stablecoin and offering special redemption and having some sort of trust that a human being manages that has assets and those are there to promise a huge return, is that you live or die by the quality of a small group of people and by the initial instantiation of the protocol. So if there are even mild flaws, there's going to be a trader on the other side of that perturbing and pushing it to try to create a cascading failure. Because if they can succeed in that, then they're going to walk away with $1 billion in a day or $2 billion in a day, and you're left with your dick in your hand. It's a real shitty situation, and that's what it looks like happened here.
Yeah. So, I mean, do you think that this is going to have long implications for crypto? Because a lot of people lost a lot of money, a lot of VCs lost a lot of money, a lot of big investors lost a lot of money. They're now going to be reluctant to bring in new, fresh capital into crypto. Or do you think this is a quick recovery and the wind blows us all away?
That's a good question. Well, I think Mike Novogratz is probably Googling laser tattoo removal right about now. So he can take care of that Luna tattoo. But, outside of the levity of it.
Novogratz did get a tattoo. He said this at the Miami event.
I think this could be the event that actually finally pushes us into a winter again, into a bear market for crypto again. I mean, last year was just crazy. The irrational exuberance, the NFT market, the kinds of yields that the DeFi protocols were providing. I mean, valuations were in the tens of billions of dollars where there was no use or utility or path to use or utility. And so then we kind of started seeing towards the second half of the year a bleeding, and that bleeding was kind of slow, but there was a degree of inevitability about it. And now that this event's occurred, it's going to probably create a staged series of events in the marketplace. Like, for example, I could see a very high probability of regulatory scrutiny dialing up. I could see a lot of scrutiny, especially in market making and trading. I saw Gensler, actually, I think it was today, mention that he thinks that exchanges are market making against their customers, which, for the chairman of the Securities and Exchange Commission to say something like that, that's not a minor or mild statement. That's a very significant thing. And he probably just didn't say it out of his ass. The SEC probably has some evidence of that, either it be insider whistleblowing or it be from studying books very carefully. So, when you look at these types of things, this is the type of an event that really can have long-ranging and cascading failure in not just the Luna marketplace, but across the entire spread. So I wouldn't be surprised to see, over the next 6 months to 12 months, this clearing. And it could either clear from a perspective that it flats the market, or it could clear from the perspective that it actually creates a massive downturn, and we could see Bitcoin actually fall below 20,000 or 15,000. The other problem is that there's a lot of leverage trading, margin trading. There's a lot of people who are speculating in fairly unhealthy ways, that whenever an event like this occurs, losses get amplified. So once you hit a certain threshold, then it creates another spiral down, and then it pushes you to another threshold, and then you hit another spiral down. And there's really no floor because there's no one on the other side basically creating that floor. So you're just in free fall for a while. And really what one has to look at is the ratio of retail to institutional money and who's still in the green and who's still in the red. And if there's a lot of people that are still in the green, they might decide just take some profits off the table, which will create further cascades down. And then eventually the market will collapse, and it'll go into blood in the streets and panic mode, kind of like what we saw in the beginning of 2020 when COVID first came out, and it just was crazy. Bitcoin got hammered. Everybody got hammered.
Wow. All right, Charles, I'm here, I'm listening. I'm going to hand over the mic to anyone who wants to take over, but good to chat to you, my friend.
Yeah, just a shitty day all around for everybody.
Shitty day all around. I think much more for me, but shitty day all around.
All right, who's got the next question? Come on, does anybody? Go ahead, Diogenes.
Yeah. Hey, Charles. Thank you. Hey, Charles. Hey, friends. I've spoken a couple of times now, so I thought just a couple sentences. And some of you might be in the same boat. I'm 22. I recently graduated college. I was your average guy. Had friends, had girlfriends, whatever. Went to some parties. Didn't really think about the monetary system or excuse me, my phone's going off. Or philosophies too hard. But then I found crypto and blockchain, and I was really amazed of what could really be done and how optimistic I started to become. My name Diogenes, essentially he is a cynic, but internally I'm not a cynic, I'm an optimist. So I think blockchain has really helped me see that. So, and of course, Cardano is my favorite blockchain, and what's been going on recently is a testament to how great I feel Cardano is and how it'll live on. So Charles, my question is essentially to spread awareness. I know Shahaf, Cody's CEO.
Well, first, why don't you put your phone on silent so we don't get vibrations every 15 seconds?
There you go. Yeah, my bad. I'm getting a lot of followers from the speakers. Sorry about that, guys. I really am.
Go ahead. Thank you.
I was hoping it wouldn't be too bad on your end. My apologies. Where was I? So obviously, so Shahaf, Cody's CEO, has been tweeting about it, and they even made a Medium post about it. But Charles, just talk about it as detailed as you'd like. What makes Jed, Cody being the issuer of Jed going to be on Cardano, what makes it significantly better? You can talk about the research going into it, how, the methods. Just talk as much as you want. And then if you would like, really emphasize how the decisions that people make are really affecting people. It's really, I'm seeing a lot of jokes on Twitter, and of course some of them are funny, but essentially retail investors are really getting fucked. You know what I mean? Like they really believed in Luna, and a few mistakes from some people have really caused people to, absolutely just be in shambles. So yeah, if you can just talk about those things. Thanks for having me on, man.
Well, I've been thinking about stablecoins since before most people in this market even entered the market. And the very first cryptocurrency that I worked on was BitShares. And we had something called BitUSD, and it didn't really work out the way we hoped. But, we were thinking about this back in 2013. So this is a long-standing thing of, can one achieve an algorithmic stablecoin? And the reality is there's no magic to the construction of an algorithmic stablecoin. Somebody has to take the risk. And there needs to be some notion of collateral that is volatile. And then ideally, if you're clever about the construction of that, you can create an asset that pegs something that's ideally more stable, either a basket or a currency that's known to be more stable. Although with the latest CPI from the US dollar, it's US dollar is not very stable right now either. I mean, it's experiencing unprecedented high inflation rates. All right, so if you take a step back and you say, all right, given these facts that nothing is complete or absolute, all you can do is trade risk around. If there's a group of people that are willing to take that risk for whatever it is, and they're comfortable with that, then it's a question of how deep is that pool of the counterparty, and under what events is that counterparty no longer able to take that risk. So all the time, I got a lot of money these days. I lend money out or do things and through various different investment vehicles. And when I do that, usually we can get great returns, about 15% in some cases. Okay, well, then our number one question when we're looking at these types of things is, who is the counterparty and what happens if the counterparty collapses? You see, and so it's just a very simple question, but you really have to dig deep and understand these things. And so algorithmic stablecoin is no different. It's just the counterparties are assets, and you look at the volatility of one and the collateralization of one. And the point of JED was really to say, can we do this in a very explicit way? And can we basically create a design where you have more collateral, usually a factor of 4, I believe, with the current instantiation, although I'll have to check it. So that, if there's a huge market event, you would need a collapse of the market of greater than 50% in a short period of time in order for the peg to be broken. Now, where you get into trouble is when you try to create anti-gravity. What I mean by that is when you do things like go with a fractional peg. That's what basically the modern banking system does. They just create money out of thin air, and they say, don't worry, it's okay. As long as everybody behaves honestly and pays us back, well, everything will be great. All this money we've created out of thin air. And say, well, what happens if they don't? What happens if, bad things occur? Oh, they'll just simply become insolvent. But don't worry, the lender of last resort, the Federal Reserve, will show up and bail us out. It'll be all great. Or the FDIC will show up and help you guys, you retail guys out. And of course, that's just a crock of shit, which is why we've gone from $4 trillion of debt to over $30 trillion of debt. And it looks like we're on horizon to spend more than $1 trillion a year on interest payments for the debt that we are currently carry as a society, which no one seems to talk about or care about. And it's just really messed up. Not to mention the fact that every 7 years at this current rate of 9 years at this current rate of inflation reported, you lose half your money. Okay, just put it in your bank. The digits will be the same. The value on the screen will be the same, but every 9 years you lose half your money. At the current reported official inflation rate, I'd argue it's actually more like 20%. Okay, so the other side of the story is systemic risk. So when you build something as a DeFi protocol, the risk is going to be basically in the funds and the assets associated with that protocol, which is a subset of the entire layer one. Now, this at times can create existential risk if there's too much in it. For example, Ethereum with the DAO, which is why they had to do the bailout there. But generally speaking, if the overall ratio of value in the DeFi versus application versus value outside of it is reasonable, then even if there's a failure or mistake, it's usually localized and the market will clear those losses in a fairly short period of time. It becomes problematic when it's a very sizable amount of the overall liquidity, trading volume, and valuation that's stuck in the protocol. And so you really have to think carefully about some edge cases that are problematic there. So first off, you have to make sure that whatever is written in the protocol on paper is actually reflected in code. That was the issue with the DAO. It was not the case. There was a reentrancy bug, and that created tons of problems. So the case of JED, that's why we spent so much time thinking carefully about formal methods and trying to really prove out not only properties of the protocol, but also ensure that whatever code is generated is easy for an auditor to go through and verify. So the probability of having a semantical error between the translation of the protocol from paper and the proven properties to the code is 1-to-1. It's an accurate, high fidelity translation with a low probability of a latent bug. Now, that only covers you if you assume that the protocol is correctly designed. And no protocol can be secure against every attack vector. Protocols come with buried assumptions. So I think one of the things that would be prudent for coding to do is to publish what are those assumptions, make sure everybody fully understands them, and people will behave accordingly. The other side of it is that don't promise people things that you can't deliver on. They're like this anchor thing with 20% returns. It's just like, okay, well, if you guys can do that, why can't I do that with any bank account or asset? Like, why can't I go to Chase and just put my money in a bank and they just get 20% per year in perpetual? You say, well, it just doesn't work that way. I say, well, so let me get this straight. It works that way because crypto? That's just magically going to make this all work? Because crypto, that's how we can guarantee these crazy types of returns and so forth as your Ponzi-nomics. And so that's the other side of this. Don't build DeFi protocols with these crazy assumptions about value. Now, you can have things where you get 35% return, 85% return. That's called microfinance. I mean, the interest rates of a loan in Kenya are 85% for people outside of Nairobi. Yeah, but you also have to understand the default rate is 40%. And you also have to understand that the loan book depth is not very big. The entire MFI market is in the billions. Contrast that with institutional money. There's $300 trillion in institutional money floating around the world that people manage and trade. So there's just no way you could, with that kind of depth, approach a loan book like that and get anywhere near those types of returns. Okay, but you can with small amounts of capital, the millions of dollars, the tens of millions of dollars. Okay, so this is the other side of it to avoid getting scammed, is understand proportionality, understand the levers that manage and maintain these marketplaces. So when you look at things like returns, if they're significantly above the average of the S&P or bond rates, there's got to be under the hood a reason for that. And if that reason is usually going to be either there's Ponzonomics and it's just a scam, or the reason is you're actually taking enormous amounts of risk. So you make a fortune until you don't, and don't oftentimes translates to a cascading failure where you lose 90% or more of your money in a very short period of time. That's just how these things usually work in practice. And Diogenes, what was the second part of your question? I've forgotten.
Oh, yeah, I guess it kind of blended through. It was just how, just the impact, the fact that, I mean, not specifically Luna, although of course it's the recent example, but how the actions of a few people who might not do things correctly can really impact a lot of people, as in people who were invested in Luna, it's at $2 right now, like I'm sure people had thousands, just regular people. So, just the impact of that disproportionately, if you could speak about that.
Yeah, I mean, it's just a great example of what happens when you have these trust things is that people go and they dump lots of money into these projects and they succeed or fail. And when they fail, the people who end up getting hurt are usually the retail investors. And the project founders seldom suffer significant consequences. I remember seeing pictures of Mark Karpeley's post-Mount Gox running around. He's actually lost a lot of weight. He looks pretty good in the suit. And I guess he's starting his next venture, and how much money was lost with Mt. Gox. That was kind of the scandal I was raised on inside the industry. And there's plenty of other people have gotten away with a hell of a lot. Meanwhile, the retail investor gets fucked. And most of the people that were putting their money, these lunatics, as they called themselves, were basically just told, oh, there's no risk. You're going to make a 10x every day. And look how great this is. And it's just free money. And it's just to the moon. And getting all this noise. And now we're here. And the predictable consequence of here is going to be probably tomorrow, as soon as tomorrow, politicians and regulators calling for new laws, new investigations, and a crackdown on the crypto industry. There's probably a good probability that this was actually done by some Wall Street shops who are trading. So, it's like Wall Street comes and blows up part of crypto. So the solution ought to be, let's go regulate crypto, right? Let Wall Street keep all the money. But, this is what happens when you play with the big boys. You have a $2 trillion valuation. You have markets deep enough for hedge funds to plan and institutional investors to plan. They're going to treat you just like they treat Microsoft or Tesla or any other stock. And if they find opportunity to suck your blood out and leave your desiccated corpse on the side of the road, they're going to do that. So understand, as a retail guy, you're now competing against the BlackRocks of the world, the Citadels of the world, the Rentechs of the world, the others. And they are very smart, very ruthless, and extremely well capitalized and have unfair advantages in the way that they do things. And so just understand that. And it's just unfortunate. What really bothers me, though, is that some of these project leaders, they behave in incredibly immature ways. I understand there's Twitter, every now and then we jab each other, but, running around and bragging about how big your reserves are and how much money you have and how you can just buy everybody out, how powerful you are. I mean, it's an undeserved arrogance, and it's always punished in the end, always. You very rarely get away with these types of things. It's one thing if you're Carl Icahn, because you're fucking Carl Icahn and you've been around since like the Stone Age. And you're so covered in scars from battles you fought that nobody wants to fuck with you. And you got $20 billion to play with. And that's your money you're playing with. It's another thing entirely when you're a kid who stumbled into billions of dollars and not a lot of adult supervision. And now you're running around bragging and telling people that, you can do X, Y, and Z, or you can acquire this, and you're managing this fund, and you're making huge grand promises, and like a Pied Piper, people follow you. It's just shitty that our space tends to attract this and reward this, and has given so many this kind of power when they're not prepared for it, and they're not capable of handling it. It's a tough space out there, and anytime you slip up or make a mistake, it's like, playing a chess grandmaster. You make even a kind of an average move, they're going to crush you for that. You have to play a perfect game, and if you don't, you're going to lose. You're going to get your ass kicked. And even if you play a perfect game today, you have to play a perfect game every day when you're talking about these kinds of stakes. And you have to have a good network of people to cover you when you're down. It's just too much responsibility and too many burdens. And I hope if there's any positive for this event, it causes people to take a step back and start asking some serious questions about project governance and maturity and the types of claims and expectations that are being levied, the time horizons that are being levied. And if that doesn't occur, then I guess this cycle is going to repeat itself again and again and again and again.
Yeah, exactly. Thanks, Charles. Well, first of all, I'd like to apologize for the beeping or the vibration earlier. I feel pretty bad about that. But yeah, thanks for speaking about that. Needless to say, this is my first bear market or whatever you want to call it. And my friends are freaking out, man. You have no idea. But I keep listening to, as you say in your video, the old guards. And, I find peace in knowing that what is good will win over time. And I think Cardano is good, and I listen to a lot of podcasts, man. So I understand, life is short, do good things. And I do like what's going on here. And thanks for what you do, Charles. Thanks for having me on. And thanks. Yeah, stay safe, everyone. Thank you.
Thanks for coming on, man. Okay, who's up next?
Bullish. Dumpling.
Oh, Big Joe. Hey, Charles. Thanks for having this space. I have two quick questions. Excited to finally talk to you. I keep getting rugged every time in your space. Finally, it works. Two questions. Number one, what do you think will be the best course of action for Do Kwon at this point in time? Obviously not financial advice, but just curious to hear what you think. And number two, what's your view on the potential food crisis in the world? How are you preparing for it? You own the ranch? Are you growing food and cattle on your ranch? Thank you.
So for dough, I have absolutely no idea because I don't know key information I need to know in order to be able to come up with a plan. I have no idea what LFG's reserves are and what commitments they've made, how leveraged they are, and what's coming their way. I imagine at this point, there's probably already several attorneys putting together a class action lawsuit and probably regulators in more than one jurisdiction that are starting to draft some letters to begin the process of a slow, vicious investigation for people in a circle. I also don't know what loans they've taken, all this type of stuff is try to shore up everything. So I've read some Twitter threads that he's put out, and those threads have kind of articulated a plan. And I guess they were looking for some sort of financing. But the problem with trust-based pegs is once trust is gone, it's really hard to restore them, and that's just where they're at. And it's going to be really difficult, in essence, for them to even get back to where they started, much less stop the death spiral in this respect. So I don't have any particular advice. This is the problem with all these types of things is, once they go rolling, it's like catching a falling knife. Just do your best.
To do it on my
don't
phone,
lie.
JT.
Be transparent and tell people what you know and what you don't know. Usually what ends up happening when these crises occur is that people get increasingly nervous and they start wanting reality to be different. And then what ends up happening is they make statements contrary to reality, statements that they know aren't true, in a desperate attempt to try to save themselves or others. And then the one begets another, and then you take a bad situation and you make it catastrophically bad. You take something civil and you turn it into something criminal in that respect. So not a good situation to be in. And our thoughts and prayers are with the people that are impacted and affected. But there's not much that can be done. And unfortunately, I don't have any amount of information that would give me the ability to give advice beyond that. Now, with respect to the food crisis, this is something I talked about right when COVID came out, saying that the lockdown policy is going to destroy the world's supply chains. And of course, we were told, oh, well, you have to do this because this pandemic is just so bad. It'll kill 100 million people if we don't do that. I guess people don't seem to understand cause and effect. If you destroy the world economy, and by the way, some people getting sick doesn't destroy the world economy. This is not Ebola, but shutting everything down and vicious lockdowns, preventing freedom of movement, telling businesses they can't produce things anymore, that creates catastrophic cascading consequences to the world economy that take years to decades to work their way through. And that loss of productivity in the Western world means people go into unemployment and inflation goes up to 8 to 10%. In the developing world, it basically means people starve to death. The New York Times even wrote an article back in, I think it was 2020, saying the coming acute hunger crisis, according to the World Food Organization, where they believe more than 100 million people will be pushed into acute hunger, of which probably 5 to 10 million of which will actually starve to death, mostly children and the weak, so elderly. Okay, that's what happened as a direct result of shutting the world down. It is what it is. We all told everybody this was going to happen, and now we're witnessing it occurring in many different locations. Some parts of Ethiopia, it's now happening in Northern Africa, it's happening in some parts of South America, some parts of Southeast Asia. And it's just getting harder and harder for people to get food. And it's getting harder and harder for people to afford buying food because the prices keep going up. Of course, people will just blame the Ukrainian issue. And oh, no, it's all Ukraine. As if one country supplied all of the world's food. But no, it's not the case. You know, yes, this conflict certainly contributes. Ukraine is one of the largest producers of cereals in all of Europe. It's the breadbasket of Eastern Europe. And it's just exacerbating a crisis that's already been brewing for the last 2 years. And it's only going to get worse. It's not going to get better anytime soon. Okay, so that's just one side of it. The other side of it is, yes, we now have an energy crisis, a self-inflicted energy crisis. We had huge surpluses of energy production. And then people said, well, no, let's cut everything and let's not produce any more energy and let's destroy pipelines and all these other things. So then when you reduce one of the global suppliers of oil and natural gas, and suddenly we have an energy crisis. Oh, no. Oh, God help us all. And lo and behold, when you have $5 diesel, $7 a gallon diesel, $8 a gallon diesel, go figure. It's really expensive to produce hay. And it's really expensive to produce all the inputs that go into farming. What does it mean? It means price of food goes up. Again, there's latency here, about 12 months, 24 months. So the worst is to come in that respect. Drives a lot of smallholder farmers out of business. And what ends up happening is that land gets consolidated, gets purchased by large investors, multinational companies, big investment funds like the BlackRocks of the world. And then you end up having lots of food production handled by only a handful of companies. Okay, if you're okay with that, I guess. I'm not really so okay with 5-10 companies controlling all of our food. About 5 companies control all of our media. How's that working out for the world? You're really happy with the quality of information you have? Boy, can't you wait for 5 companies to have complete control over everything that's on your dinner plate? Well, that's the world we're moving towards. Is a direct consequence, again, of terrible policy on the energy side and on the supply chain side and consolidation of things. Okay, so what am I personally doing? Well, I'm heavily invested in, obviously, ag tech. You know, I keep lots of partners in the hydroponics world and aquaponics world. And on my personal ranch, I'm working with a company to build a fodder farm that can feed up to 1,000 cattle. And I'm going to power that whole thing off of solar, and the inputs will be very easy to get in. And I can stockpile seeds for years, which means I have a predictable cost of food production and a predictable feedstock for my bison. Okay, so that's one dimension of it. Now, if this model works, it would be very nice to get to a feed service business and put them in every small town in America so that farmers can get predictable cost of feed for their animals instead of paying, you know, it used to be $80 a ton for hay. Now it's $500 in some places for hay per ton. Maybe we can get that number to be consistent and stable. That's the best I can do at a small scale. Unfortunately, you need nation states to be able to do any more than that. And they just seem utterly uninterested in our supply chains being secure, food security existing, and local production of food.
They think it's totally okay for food to be super fragile, and that's in a situation where there's even a minor disruption in our supply chains, that store shelves could be diminished to a point where a city could starve to death. I mean, it's not an academic question. New York City would literally converge to cannibalism within a few weeks if you cut off their supply chains. There's just simply not enough local production in any area. Okay, so this is the crisis that's coming, and COVID really did expose it, but it's been brewing for a long time because of a variety of features, and it's just yet another problem that we have to deal with globally. There's tons of environmental concerns about the way we run the world. The energy sector is not being run well. There's a lot of systemic problems in global trade. There's a coming crisis with the dollar collapsing. And it's just inevitable at this point. And now there's a food scarcity issue. And what's so fucked up is that never has there been a time where we've lived with better technology. Never has there been a time where we've lived with better capability, capacity, and efficiency. This is literally a time where productivity is up probably 10x over the productivity that our grandfather and grandmother lived under. Yet somehow we have a significantly more scarce world and worse resource management. That's a problem of governance and governments, and that's a problem of centralization of power. It has nothing to do with actual production, and it has nothing to do with people at the edges failing. They're just being victimized by these systems, and they need to change, or they're going to really start hurting everybody.
Thank you, Charles, for answering my question. I don't like to get political on the space, so I will add one last comment before I jump off to my space. There's a lockdown in Shanghai, and I think there might be more people who are going to die of starvation than people who are dying from Omicron. That's already happening and might very likely be happening in the near future as well. And that's very sad. Thank you very much, Charles. I'm thinking of having a Twitter space about preparing for food, energy shortages, and all kinds of situations that's going to happen in the future. Would you be interested in joining and share your knowledge?
I might be able to, but I've been traveling a little bit, so it just depends on when that falls.
Great, we'll let you know. And thank you very much. Talk to you later, guys. Bye-bye.
Bye-bye. Next question.
Hey Charles, I think I'm in the next. So you already partly talked about it. You tweeted about BlackRock and Citadel being involved in the attack on Luna with like 100,000 Bitcoin. Don't you think this should be illegal? And do you think there will be an SEC investigation? I mean, after all, it's their job to protect retail investors, isn't it?
It's an unconfirmed report, so who the hell knows if it's true or not. It just crossed my desk, and people said that it might be. But even if it's not, the fact that it's a plausible attack vector shows you just the reality that we live in. Guys, when you deploy a DeFi protocol and you say it's decentralized and open to all, that's open for all to participate regardless of intent. Some people's intent is to follow the protocol. Other people's intent is to break the protocol in order to make money. If you look at George Soros in the early 90s, broke the Bank of England. Why? Because the markets allowed it. And so people will always try to take advantage whenever they can, regardless of whether it's legal or borderline legal or illegal or gray area legal. It's always just a matter of, well, how good are our lawyers? How good is saying we're sorry? We'll pay the fine. These types of things. It happens all the time in Wall Street. This game has been going on since before any of us were born and long after all of us are dead under that legacy model. Now, it would be nice to say that these things are illegal, but where do you cut it? Short selling is not necessarily illegal. You're basically taking a bet that you think that the market's going to move in a different direction. And you say, well, what if you're influencing the market, pushing the market in this particular way? Well, yeah, you technically could say that is commodity manipulation, maybe, sure. But, where do you cut it? If sanctions are coming, because you're friends with Biden and, you shorted something, Is that illegal? Well, maybe it is, maybe it isn't, but apparently no one ever gets prosecuted with these things. Look at all the insider trading that occurred with the senators when they got their COVID briefings and they realized how bad COVID was going to be for the economy based on the response. And then suddenly they started shorting things. Look at all the vaccine trading. So if Monsif Solawi was talking to people and say, I think we might approve Novavax, I think we might give some money here, and that person bought something, is that probably insider trading. Anybody get prosecuted? Probably not. It's just the way we live right now. The problem is politics have gotten into law enforcement and regulation. And the people who get punished for things, it has nothing to do with whether they actually did it or not. And it has nothing to do with whether it was the right thing to do or not. It has everything to do at this juncture with how big is your lobby? How politically important? Are you in the in crowd or the out crowd? Mm-hmm. Okay, that's just the reality. One of the things I'm very excited about with the Twitter takeover with Elon Musk is that under federal law, as a publicly traded company, there's a record-keeping requirement. I believe Sarbanes-Oxley has one, and there's other pieces of legislation that require record-keeping, including digital communications. I cannot wait to see if Musk actually opens up the email archives of Twitter and sees if there's collusion between Twitter and the other tech giants for coordinated takedowns, and also political operatives contacting Twitter officials and asking them to deplatform people that they don't agree with. Okay, so I'd love to see that. Now, should that be illegal? Of course. Is it? Probably not. Will people be prosecuted for it? Probably not. This is just the world we right now live in, guys. And I'm pretty fucking cynical about the whole thing. And I've gotten to a point where I no longer have faith in institutions, the current set of institutions, to prosecute people and to cleanly and fairly regulate markets. Instead, I have faith in code. I have faith in protocols. I have faith in math that constrains human beings. This is why the gold standard existed. I posted a video earlier today on the gold standard. The whole point of the gold standard was saying, look, you can't trust politicians. You can't trust banks. You need something grounded in reality and physics in order to constrain the money supply. And if you step away from that thing that's grounded in physics and reality, and you go to trust us, don't worry, we'll be smart about it. Don't worry, we'll be great about it. Then you suddenly have economists with a straight face. I actually got into a fight in Abu Dhabi a month ago with an economist who runs a central bank who told me with a straight face saying that printing money does not cause inflation. With a straight fucking face. He's just looking at me. Oh, no, it doesn't cause inflation at all. I said, let me get this straight. You're telling me the trillions of dollars we printed during COVID, trillions of dollars, did not cause inflation. He said, no, completely disconnected. The supply of money has nothing to do with inflation. Used to be the definition of it under the Austrian definition. Now it's not even only not the definition, it doesn't even cause it. There's no causal relation between printing trillions of dollars and injecting it in the economy and the devaluing of your money. These are the people in charge right now. These are the people running the ship who are in charge of the show, making decisions of what's illegal, what's not illegal, who goes to jail, who doesn't go to jail, making decisions of whether the money in your wallet is worth something, not worth something. And you can fucking tell me that they're going to make good decisions? No, that ship has sailed a long time ago. So the whole point of our industry is to take our power back. The whole point of our industry is to say we're just going to do things a little differently because we can't really trust the order that we live in right now. And that's why we're building things like Bitcoin. And that's why other protocols exist in the space, because they have predictable, honest, transparent mechanisms behind them. You might not like them. They might not be convenient. Yes, they go up. Yes, they go down relative to other markets, but they're predictable in that respect. Same for Cardano. It's predictable in that respect. There's no surprises here, okay? It does what it's supposed to do. And it doesn't matter if what it's supposed to do is convenient for you. It doesn't matter if what it's supposed to do is financially in your best interest. It just is there. And that certainty, stability, that clarity, that simplicity of action is what allows you then to build an economy. I mean, think of engineering. Engineers every day rely on the laws of physics. If you're building a bridge, you're building a skyscraper, you're building a train, you understand how physics work. And because physics are repeatable and predictable and understandable, regardless of your feelings, regardless of the consequences, you can engineer around those laws of physics and then suddenly have a skyscraper. Suddenly you have a suspension bridge. Suddenly you have an airplane, these types of things. And they predictably, reliably work and people don't die. Could you imagine if the laws of physics were controlled by the Fed or they were controlled by a political party? Oh my God, ravenous fucking leprechauns would be jumping out of the bushes and attacking us as we catch on fire spontaneously and then turn to ice. Physics would break down as we know it. All society would collapse as we know it, but they're not. So the whole point of cryptocurrencies is to converge to a predictable law of social physics and then rebuild the systems of society in that respect on top of them. And that's frankly why so many people are excited about them and why so many people believe in them and work in this space and want a better future. I think we're all, just frankly a little bit tired of every single year the same bullshit happening again and again, and for us to be promised it's not going to happen again. I'm sorry, it is. It's at this point our responsibility for believing that bullshit. It's not going to get better unless we take our power back ourselves. And the most fundamental thing is our money. If we don't control that, if we don't have access to that, if we don't have a say in that, we have no power, because the people who do have a say in that can use it against us at any given time and shut it off from us at any given time. Look at CBDCs. Not only do they take what's already being done in the legacy world and put it on steroids, they add new kinds of unprecedented powers. You can connect political speech, call it hate speech at any time for any reason, and then just deplatform people's money. So let's say you have the wrong political views. You could live in a world where a person pushes a button and suddenly you can't spend any money anymore. Don't believe me? Look at how many merchants and media organizations have been deplatformed and you can no longer send them money. All their processors turn off, can't use PayPal anymore, their bank accounts get shut down. The soft mechanism of exerting power over their inconvenient beliefs. Okay, now take that up to the next level where you simply can do it at the central bank level with a digital asset. Make your money no longer fungible. That's coming if we don't stand up and fight this now. And it's not going to just be used to silence Nazis, because everybody becomes a Nazi at some point. Everybody is evil at some point. Everything's hate speech at some point. Guys, the language is changing. Culture is changing. Everything's changing so quickly. It wasn't too long ago that men couldn't get pregnant, but I guess they can now. Go figure. I mean, Elon showed us with the Bill Gates emoji. And I guess tomorrow maybe something else will happen. I don't know anymore. Everything changes every day. And if you're not along with it, you're inconvenient. You're the enemy. Okay, so everything is going to change very quickly. And if you give these capabilities to a small group of people, they're going to use these capabilities to preserve and protect their interests and power, even if it is directly against the good of the majority. We're seeing it again and again and again, abused again and again and again. And you see now how the sausage is made because the internet exists and it's all being broadcasted on a regular basis. But Jesus Christ, guys, it's been going on like this for a long time. It's just getting worse.
Charles, thank you for that. One more question. Do you think anything would happen if all of this would happen transparently on the blockchain so we can actually see what the politicians are trading? I mean, of course, they would still make their own laws. After all, they are the ones who make the laws, so they will probably never face the consequences anyway. What do you think?
Honestly, I don't think it's going to make any difference if the way these politicians stay in power, the way we vote stays the same. There needs to be a complete overhaul, especially in the United States, with the Constitution. You need term limits. You need special provisions in the Constitution for the fourth branch of government, which was never intended but now exists, the bureaucracy. And you need a complete overhaul of how the presidency works and is elected, as well as the military-industrial complex of the United States. These things are just facts of life right now. They cost $6 trillion a year to maintain, and they're not only horrendously expensive, but they also are against your personal liberty. So yeah, you can make things more transparent,
USD
We've
is
known
coming
since
back.
2011 publicly all the Snowden revelations. Has anything
Slowly.
happened with the intelligence industrial complex? No. It's gotten bigger, wealthier, more pervasive in every possible way. The people's response to the NSA is spying on us is to say, boy, that's terrible. Hey, let me go put a recording device inside my home and talk to it every day. And of course, that's Alexa and Google Play and all these other home devices that you have, which actually can be used against you in a court of law, and has been in several investigations where they've taken audio recordings and they're admissible in court. Okay, so people are really bad individually at protecting their liberties and freedoms, especially when it goes against their consumer interest or convenience, which is why you have a constitution, which is why you have checks and balances. It's why you have rule of law to ensure that basic freedoms are preserved and protected for the common good and interest of society. The problem is that we don't have that in the current constitution. It never could have anticipated a government like ours. And many of the checks and balances the founding fathers intended were systematically removed. So, for example, election of senators used to be done by the states. Why? Because it protected the interest of states. First thing the progressive movement did was get rid of that, make it direct democracy. Basically, it was a super congressman. There's 5 times fewer of them, and they last 3 times as long, but it's basically a super congressman. Okay, but that was never the intent, because they represented different constituencies and they created a balance of power between the state governments and the federal government. By federalizing them, what they had effectively done is they just created another institution to support the growth of a gigantic federal bureaucracy, a standing army. The United States never stood for a standing army. We always got rid of it. Why? Because our founding fathers knew that if you had a standing army floating around, the best case scenario is they go and start all these little small wars just to feed themselves. The worst case scenario is they actually take over the government. Look at how many coups are done by military juntas. It's not a good idea to have standing armies floating around. They really don't do a lot for you. And they create all kinds of chicanery and havoc. Okay, so they said, let's probably not do that. After World War II, what ended up happening? A permanent standing army cost us $800 billion a year to maintain this. And then they put some jingoism over it, and boom, there you go. And then look at how many conflicts we've had since World War II, how many times we've deployed that since World War II. And everybody tells them, please don't do this. If you do this, it's going to create all these problems. Oh, no, we know what we're doing. Then Vietnam happens.
Yes,
and they said, never again. We'll never get into another conflict. Then we got Super Vietnam, which is Afghanistan, twice as long, twice as expensive, and the same result. And we said, but trust us this time. We're going to do it all right. Why does that happen? It's because the system allows that to happen. And we do not have the democratic processes in place to be able to overcome such a thing. So it goes always back down to the fundamentals. You have to get control of your money. Once you have control of your money, then you can have control of your voice. Then once you have control of your voice, you can rewrite the DNA of your governance system to ensure that the system is not able to do these types of things anymore. And we can rewrite the Constitution accordingly. But you have to build it in stages and steps. And mild forms of transparency here and there, they're just not going to work if they're embedded within the existing system.
Might I ask, well, who do we trust then? If it seems as though there's nobody, who do you trust? Is there any other outcome other than what is apparent to happen? Is there any other possible outcome, or is it just going to be what it is? You see what it is?
Well, you can trust your friends and family. You can trust everyday people. It's just you have to look at economics and you have to look at game theory. This is why the entire field of game theory exists. The prisoner's dilemma exists. People are not going to behave against their personal self-interest. They're just not going to. And people only cooperate in times of high trust. So when you have high trust institutions, when you have high trust individuals, people will follow them. People will trust them. People will work with them. But if you're in ages of low trust institutions, basically you revert back to the Nash equilibrium. People simply will not cooperate. They simply won't work with each other. So what are we seeing right now? We are seeing a global deficit in trust. every single institution, whether they be transnational bodies like the UN, they be banking cabals, they be the CDC, these institutions have taken a huge trust hit because they made claims and promises that they didn't deliver on. They made assertions that hurt people. So what you have to do is you have to take a step back and say, okay, in times of low trust, how has the human race responded to that? Well, in case of money, we regress back to commodity monies because commodity monies are trustless. Whether you trust your counterparty, if they're offering you a bar of gold, all you have to do is verify that's a real bar of gold. And the minute you've done that, you don't really care too much about their country of origin, the religion, whether they were good to you or bad to you. You know they have something of value that's divorced and disconnected from a trust relationship. It's the same with crypto. If somebody's paying you Bitcoin, you don't really care about the particulars there. You know that that's real value. There's no counterparty risk, no chargeback. There's liquidity and the ability to store that value. Suddenly, you change the calculus of the commercial relationship. So you have to look at it from that perspective of, okay, we're now in low trust mode. So first, that's going to create enormous social friction. Trust allows you to have lubrication of transactions and governance. If you trust people, if you trust things, you don't have to spend a lot of time to do things. Everything's low friction. If you don't trust things, everything gets gummed up. You're perpetually paranoid. It's really hard to do anything. Think of it just like a car sharing service. If you go to a country where everything is hunky-dory and, you can just get in any taxi and everything's fine, it's pretty easy to leave the airport and get somewhere. You just go in the first car you see, get in, they take you where you need to go. There's no problem. Now, contrast that with going to a country where there's a high degree of kidnapping and taxis are a primary vector for that. You're scared shitless when you get off the plane. You have to spend a lot of time and effort vetting and verifying that the car you're getting into is correct. And, this person's not going to screw you. Maybe you have to wait for a group. Maybe, you have to call ahead. Maybe you have to pay a premium for these things. You're checking a license plate. You're doing all these things. So something as simple as transportation from point A to point B goes from friction-free. As soon as you're there, you just click a button, your Uber arrives. As soon as you're there, you just get in the car, you drive, to a huge stress point because you have low trust in that transportation media. Then what ends up happening is consumers understand that there's their markets formed to actually try to restore trust, and they make the trust arbitrage. That's effectively what crypto did. After 2008, the fiscal crisis was so bad, and the response to it was so clumsy and bad that people started realizing that these problems are not going to get fixed. They're only going to get worse. So crypto became a trust arbitrage on the monetary system, the global governance system. People started putting money in it as basically an opt-out of that system, saying that we're going to go into a completely different settlement and clearing system, a completely different value transfer system, a completely different value storage system than the conventional banking system, because we no longer have faith that this system is going to endure long-term, given the responses that have occurred. Now, once you have that mindset, then what you can do is actually start looking for trust arbitrage in different places. You can do it for voting, for example. Real tangible thing that you can ask for in your county, in your state, in your country, is some form of blockchain-based voting system. Because the minute that you can start that conversation, you can also ask for ballot diversity and changes to the way that voting is done, and go to ranked choice or to preference voting as opposed to threshold to plurality. And once you go to that type of a system, then suddenly you have candidate diversity. Suddenly you have more candidates on the ballot. Suddenly you're no longer throwing your vote away. That alone massively changes the game for politicians. That's just an example. So take your money back, take your identity back, your data ownership and privacy. DIDs and self-sovereign identity, these types of things. They basically put you in control of who you are, and your identity is not owned by Microsoft and Facebook. Recently, I tweeted something saying, hey, for 30 years, people have been talking about how do we get to a password-free internet? And the FIDO Alliance comes in and says the solution is trust Microsoft, Apple, Google, and Facebook. They got it all figured out. They'll take care of it. Don't worry. Don't worry about the boogeyman. They'll just hold on to all your credentials and use your phone and Bluetooth, and it's all going to be great. That's literally what they said. Meanwhile, the solution's been there since 1991. John Callis, Hal Finney, Believe it or not, Hal did more than just Bitcoin. He also wrote the PGP standard functionally with Phil Zimmerman. They create a web of trust. Public key infrastructure, just basically register a DID and you're good. Every login is a challenge response protocol. Sign something, just like you'd sign a crypto transaction, and boom, you've logged in. Super fucking secure. So it's about revocation and issuance and attestation. It has nothing to do with custodianship in that respect, because you can be in charge of that. Okay, but guess what? They didn't include a blockchain component in their new standards. Why? Because they want to centralize power and control and own your identity. Be aware of these things where power is centralizing, and then what you need to do is say, no, I'm going to take that back and push for systems that are open as opposed to closed in that respect.
I'm going to see if he asks anything about Luna here. If not,
that the things that I would want to support, I end up just kind of like succumbing to the things that I disagree with and getting involved with those things, because it's kind of like there's nothing I could do to change, these things. And so you might as well just get a little piece of it if that's where it's going. So it's like the trust thing. It's like the people who cause the problem, aren't those the same ones who bring the result?
Yeah, don't lose hope, and don't succumb to cynicism. Never ever succumb to cynicism. Every day you got to wake up and say, look, even if it's not perfect today, don't give up, don't lose hope, keep pushing forward. You have to believe that things are going to get better. And all you got to do is just preach the gospel of decentralization. You got to preach the gospel of new systems and enlighten people. The reason why so many people let the world work the way it works today is because they don't think they have a choice, and they don't think that it will get better. So they're just trying to find a way to carve out a little corner in hell and try to collect enough cold water so that they don't burn to death.
Pretty strong.
All right. And never, ever succumb to that. Don't believe in the hopelessness. You have so much power as an individual. We all do. And so you just gotta. What's that?
It's just tough to keep the morale up. When you try to spread these things, or you try to, inform people, and just like you said, people will put these things that they speak to in their home. It's like they go and do things like that. It's like they're countering what you think that they should be doing, and it's hard to.
Yeah, but some kid some kid read about the Great Pacific Ocean plastic patch, and most of us read about it and they say, oh, that's a damn shame. That's so terrible. And what did he do? He went out and built a giant plastic collection system. This kid, he's like what, 25 or something like that, super young kid, found the funding, put it all together, and now he's cleaning up the ocean patch. Elon Musk, wanted to go to Mars, built SpaceX. One dude put a whole thing together. Took a massive risk. He put all of his money that he made from PayPal and from Zip2 into it. That didn't work. He'd be broke. One guy basically built an empire and created an inevitability about going to Mars. In fact, there was a leaked memo from NASA floating around where they were seriously concerned that Musk may beat NASA to Mars and the national embarrassment that would cause. Okay, so we have collectively a lot of power. The game is to convince us that we don't. And then we're willing to accept rulers. We're willing to surrender our liberty. We're willing to hand away so much. And the obligation of people who build systems is to build into the systems fail-safes and checks and balances. And they have a moral obligation as a systems architect to do their best in trying to design things in just the right way so that people are in some way protected from ignorance and protected from laziness and other such things. Charles. So, for example, if you write a cryptocurrency wallet, you probably should put something in to remind people of their 24 keywords and make sure they actually have them saved. It's inconvenient. It hurts your user experience a little bit, but you're doing right by your users by doing that, because 50% or more will either not write them down or forget about them or think they have them but not really have them, et cetera, et cetera. And then lo and behold, when they lose their wallet, they lose all their money. And boy, do they regret it. So these are the kinds of things you have to think about as a system designer, as an architect. And these are the kinds of things that you should aspire to if you're an entrepreneur, to make sure that you build up. Open source is another example of that. Your contributions, the things you do, they become a public good. So even if you fail, you leave behind a lot of things that other people can pick up, do something with, and take to the next level. Cryptocurrency protocols take this to an extreme. They leave behind a massive community. This Luna community, if Luna dies, looks like it will, they have to go somewhere. And maybe they go somewhere else and they're going to be better, stronger, and wiser, but they're still around. And, there's probably some well-intended people there. And if they're welcomed properly, probably could become quite productive. So never become cynical, never give up hope. There's always a way to find a way and get out. You're only truly out of the game and dead when you believe it yourself and you've given up yourself, in which case you might as well just go live in a hole, because it's the only thing you can hope for is tomorrow is only a little bit worse than today. It's like succumbing to cancer, that's terminal. Every day is going to be worse. Why would you want to embrace that and welcome that into your life? No, always fight.
No, I absolutely agree with that. I appreciate that.
All right, I got time for one more.
Hey, Charles. Thanks for holding the space. I saw the Verge article on Dish launching their 5G network along with their NFTs. After some digging, I think we found a policy ID, and we believe that these are the Dish network NFTs. So I guess it's a two-part question. Can you confirm? Totally understand if you're not allowed to. And number two, why are they a different dog other than a husky? I feel betrayed.
I do believe these are connected to the DID program, and actually Josh Miller sent me something on that. There's multiple efforts that we've been working on with Dish, from DID infrastructure to other things, and I do know that they've been pushing for NFTs for a while, and there's a lot of experimentation on ideas. See, when a company gets bitten by the crypto bug, they tend to start cascading after a little while. And so they start usually with an original intent, and they say, what about this? And what about this? And you say, well, you can do all those things. You have the skeleton key. That's pretty cool. So this is by no means, I think, the only innovation that's going to come out of the innovation labs of Dish and the consolidated companies therein. I can't confirm or deny anything beyond that, because I tend to stay out of these types of things. And I think these things are protected by NDAs and so forth. And so I always err on the side of caution about particular announcements, but we did publicly announce the DID infrastructure that we've been putting in. So I can talk about that in that respect. As for Husky, who knows? All right, Ellie, you get the last talk.
You're the best, Charles. All right, so I'll keep it quick. So we know the Biden administration is currently studying the adoption of a central bank digital currency. There's a 6-month review going on right now to see whether it would even be feasible. Do you think the events of the past couple of days pushes back the timeline on that review? And then ultimately the timeline of the US adopting its own digital currency? And then do you think this lights a fire under, for lack of a better term, the butts of Washington to get some kind of regulatory framework in place for crypto?
Great questions.
So for those of you who don't know, Ellie's part of Fox News, and it's good to have you here. I love the network. With respect to the Biden administration's executive order, I think they will deliver the report on time. The report probably was already written before the executive order was written. Basically, it's going to be, with the current officials that are in this current administration, probably very anti-crypto and very pro-Wall Street. And say that we need lots of regulation, especially around, lo and behold, stablecoins, yay, and NFTs and DeFi and so forth, giving a mandate to regulators to go and pursue, which is why the SEC doubled its enforcement division, and I imagine the other enforcement divisions are growing as well. So I'm actually quite pessimistic in that respect that anything good will come out of what's been written down, because they just simply won't acknowledge that there are any benefits to a $2 trillion industry that's currently mostly American, being in the United States, that pays high wages. And they won't seem to acknowledge all the amazing efficiencies that can be gained and all the amazing improvements from reduction of waste, fraud, and abuse to transparency that can be gained. And just anything, just regulatory improvements that can be gained by automating the regulation on the transaction side. Just because this particular government doesn't seem to understand cryptocurrencies, or even if they do understand them, they don't seem to care about the USPs we're offering. because they just really like controlling things in a super centralized way. And when you use the D word, decentralization, it creates a lot of problems. Now, what was the second part to your question, Ellie?
So the second part was, do you think that in light of what's happened in the past couple of days, that this lights a fire under the butts of Washington to get some kind of regulatory framework in place?
I do believe this will push the legislative branch to escalate and actually pass a law at some point. As you know, Senator Lummis has pushed for a law, and there's been several other people in Congress and the Senate who have pushed legislation unsuccessfully. I do believe this is going to create more support for that. So because again, there's a single party control, not divided government, and this particular party is at the top echelons anti-crypto, what will end up happening is that regardless of what's been proposed on the legislative branch, they're gonna synchronize with the executive branch. And so they're gonna wait at least for those 180 days, that report to come out, and then try to harmonize the findings and recommendations with legislation that's been proposed. Now, whether that passes or not is going to be very interesting because, as you know, the 2022 midterms are probably going to result in the Republicans retaking both the House and the Senate. And in which case, the younger Republicans are actually fervently pro-crypto. So I doubt that a Republican-controlled House and Senate is going to in any way, shape, or form pass legislation or authorize something that is anti-crypto at this juncture. And so unless they can move quickly, I don't think they have enough political time to be able to actually pass a comprehensive piece of legislation. And because the Biden administration will veto and not really allow comprehensive education coming through, cynically, I think we'll probably be waiting until 2025 for real change to occur if the Republicans retake the White House in 2025. Other than that, I have zero faith in the party of Elizabeth Warren and these others that they're actually going to meaningfully influence crypto above and beyond. It's just simply banning it, attacking it, regulating it, and hurting it. And they're going to use red herrings, for example, the Luna issue. And so, that's an endemic example of everything that crypto is doing wrong and rah. And soft power, like what they've been using in El Salvador, or what they put into you saw the IMF loans with Argentina, where they were fervently anti-crypto there to try to avoid the spread of such things. So this is just the world we live in, and where things are being pushed in. And so you just kind of have to wait them out and try to avoid as much damage being done as possible. There's an unprecedentedly high amount of money being spent on lobbying right now. And a lot of people are talking to senators and congressmen. A lot of people are talking to governors and presidential candidates. And a lot of people are trying to explain that this is a major industry and it has an enormous amount of commercial value, infrastructure security value, national security value.
Projects. Because the economics of launching a new project and printing a coin is way higher than working with an existing project because there isn't like a scalable labor market that can work with their incentives. Right. So what if you had fungible labor markets? So what I mean is, what if somebody can put up their productive hours for sale and it can trade on a DEX, like an AMM, for instance. And then a DAO can go out and say, hey, look, I'm going to buy 1 million hours of productive development.
This might be fake. This might be phony. This is a brand new channel with only one video. This isn't real. Let's go back to Charles here.
Or if they actually believe in the principles of crypto, who the hell knows? But unfortunately, Washington is Washington, and the gears are pretty gummed up right now. No one wants to be a hero during a midterm election, and there's now kind of a wait-and-see executive order, which has to kind of clear over the next 180 days, and we'll see what happens with that clearing. But I don't imagine it's going to be positive at all.
We got it, guys.
So if anything gets done, it's going to be probably neutral to negative. And more likely, nothing will actually get done in practice outside of more enforcement and regulation until 2025 with the change of the administration.
Got it. Thank you so much.
Thank you so much for coming. This was a lot of fun, everybody. I wish I had more time, but unfortunately, I have an engagement I got to get to. So until next time, have a wonderful night and stay safe.
All right, so that was interesting. Basically, this was we'll leave that. This was on the heels of this big statement that he made. A lot of people had pushback. I think everybody by now kind of has read through this. If you haven't already, go back and check this out. It's right on Charles's Twitter page. We're going to continue to learn a lot more. We are seeing a little bit of a recovery here from UST, the stable coin. It did pop over about 62 cents here for a minute, consolidating a little bit. I mean, this thing was all the way down here at one point. Man, look at this. Bottomed out less than 30 cents a couple different times here. So we are seeing a slow recovery. We'll see if this continues. We will, we'll be tracking this very closely to kind of see what happens. Thank you everybody for tuning in. Hopefully you got some value out of this. It's very, very sad. I agree with Spooky here. You shouldn't have opened your crypto app until November. Spooky Earl, I think it is a good day to walk outside and just get away from crypto today for sure. It's crazy. It's a crazy time right now, but keep the faith out there. Stick to your plan. Be patient. Hang in there. And I really, really feel for anybody who, was in this stable coin and is feeling the heat on this, and then even Terra too, of course, right? So we'll continue to monitor it, and we'll bring you up to speed on the latest, guys. Thank you all so much for tuning in. Again, second live stream of the day. And I will catch you all very, very soon. Take care, everybody. Have a great day. See you soon. Bye.